Thank you, Chairman Neal, Ranking Member T-Berry, and other members of the committee. I appreciate this opportunity to be able to testify before you on the potential of a national infrastructure bank. What I've found pretty interesting in listening to the testimony this morning and this afternoon is that there is a fair amount of agreement among a number of us in that there is a need or certainly the potential for a national infrastructure bank to meet some very important infrastructure challenges in the U.S. I'd like to focus my oral testimony on what I think might be differences between myself and some of the others on the panel, and mainly for a purpose of furthering some discussion and maybe bringing a few issues out. First of all, as some of you may or may not know, Reason Foundation has been involved in the policy arena on various forms of innovative finance for over 20 years. We've focused a lot on tolling, public-private partnerships. We're innovators in the hot lane concept as well as hot networks. So this is not an unfamiliar problem for us. And struggling with these kinds of issues of financing major projects that could upgrade our infrastructure, improve the management of those systems has been a long concern. So that is the context in which we look at the potential of a national infrastructure bank. I think it's important that the National Infrastructure Bank, in fact, be an infrastructure bank and not end up being the nation's bank, if you will, in the sense that it becomes a source of funds for all sorts of different projects that may or may not have to do with direct infrastructure. I think when infrastructure banks work effectively, they are in fact providing infrastructure. And what I mean by infrastructure are physical infrastructure, transportation facilities, water and sewer facilities, stormwater facilities. I think there is also an incumbent on a national infrastructure bank to ensure that its scope and its mission is very clearly defined, in particular that it should be focusing on projects of federal and national significance. I think there are projects that are of regional significance that may be multi-state that might also fall under the purview of a national infrastructure bank, but I think it'd be very wise to define the scope and mission of the National Infrastructure Bank to avoid local projects as much as possible. We are going to be faced with a limited number of resources and lots of competing projects, and how we define the mission of a national bank will be very important. I think it's also important to emphasize, at least from our perspective, to emphasize that as much as possible the bank should operate on a revolving loan type basis. There may be other projects that are worth funding, but it's not necessarily true that an infrastructure bank is the best mechanism for funding those projects. So if we're interested in pursuing social goals or using grants to seed certain types of projects, that may not be best handled through an investment bank. I think we have the accountability and the transparency and the operational efficiencies when an infrastructure bank operates on a revolving loan basis, because they have a bottom line that they have to focus on, and that's also a pretty clear criteria for evaluating potential proposals. I think it's also important that the National Infrastructure Bank be as insulated as possible from political manipulation. To the extent that it must be able to evaluate projects objectively using clear performance criteria, and to that extent I think we should be looking at an infrastructure bank that is independent of an existing agency. So that preserving that independence I think is important for ensuring the success of the bank itself. And again, a poorly focused national infrastructure bank could also end up duplicating a lot of alternative financing arrangements that might exist or could emerge on the state and local level. I think the key for a national infrastructure bank is to leverage resources rather than substitute resources. And we've mentioned before that an infrastructure bank is not a substitute for public financing of other types of infrastructure. We need to keep that in mind. Now, on page 8 of my testimony, I've included a chart which is essentially a checklist of what I think are key issues. I'm not going to go through those because I simply don't have the time, but I think we need to think about when does an infrastructure bank work in a high-performance setting. And some of those criteria, and that chart was created as a way for me to essentially score different types of proposals, is that I think we need to make sure it's independent, it uses objective loan criteria, it has a very clearly and well-defined mission, and I think its focus is on providing physical infrastructure and filling gaps where they don't exist. Also, there needs to be a sustainable revenue stream that can support those projects. We, of course, at Reason Foundation have talked a great deal about tolling, but there are other potential mechanisms, including tax increment financing on the local level or value capture in some cases as well, that also might be considered. But there has to be a sustainable revenue stream in order to support those loans. That, again, is important for transparency, it's important for accountability, and it's also important for leveraging what resources are put into the bank. And with that, I'm out of time, so I will stop. Thank you very much.